All right, what's up, guys? Let's make some money off some news. All my traders out there, Bloomberg put out an article. Gold surges to record on weaker dollar. Risks of U.S. shutdown. I just did a video about J.D. Vance had a meeting with lawmakers today and potentially sees a shutdown on the way because he can't reach a deal with the Democrats. Now, of course, we are the richest country in the world and the best country, and we're this and we're that. But we got to borrow money to keep this boat floating. That's kind of strange. That's kind of strange that we are sitting here worried about a government shutdown. That is nuts to me. Not to mention all of the government people and basically civilians that have also been laid off this year. A government shutdown would not be a positive thing for this economy. Now, gold climbed a record 3,800 an ounce as precious metals surged, boosted by a weaker dollar as investors weighed a potential U.S. government shutdown. Bullion rose as much as 2% to an all-time high of $3,833.59 an ounce, eclipsing a peak reached last Tuesday after notching 6 straight weekly gains. Silver increased as much as 2.4%, while platinum and palladium also rallied strongly, with advances underpinned by persistent market tightness and inflows into exchange-traded funds backed by the metals. Now, let me just stop for a second. I'm never going to tell you guys what to trade and how to trade on this channel. Okay? I'm only giving trading ideas. That's what it's called, trading the headlines. But if you are getting into the gold space for protection, why would you get into it with ETFs? You want to hold. What do they say in the Bitcoin community? What you don't hold is not yours. That is the same thing with gold. If you can't go in your closet, go into your bed, reach into your secret spot and grab your gold, you don't own it. And unfortunately, you will find out the hard way. So let that be food for thought. Read between the lines. Do what you need to do, but I'm not telling you how to trade. All right, so the dollar fell as investors awaited developments ahead of a planned meeting between top U.S. congressional leaders and President Donald Trump later Monday, a day before federal funding runs out without an agreement on a short-term spending bill. A shutdown would threaten the release of key data, including Friday's payroll reports. Now, that's super important to traders. They look for these government reports to come out to figure out where they want to place money, which economists expect to show scheduled job growth in September. A weaker greenback makes precious metals cheaper for most buyers. You hear that? Weaker employment figures would bolster the case for interest rate easing by Fed officials at their next decisions in October, a scenario that would make non-interest-bearing precious metals more attractive. Still, there's a high degree of uncertainty over the outlook for the Fed's cutting cycle, with officials voicing diverging views on monetary policy, while some economic data came in stronger than expected. All right, so we got a little confusion at the Fed. They're not all on the same page. Okay, so this is causing a little uncertainty, risk in the market. Okay, bullion doesn't look overpriced relative to the dollar and treasuries, which out to contain a level of Fed-related premium given the nature of the risk from the central bank's potential loss of independence. Barclays PLC strategists, including Barclays strategists, this is what they're putting out. Okay, this makes it a surprisingly good value hedge. So what they're saying is gold, due to dollar weakness, treasury issues, risk, and debt, that that gold is a good hedge. Gold is a good value hedge. Okay, this is what we're saying. Gold has soared 46% this year, setting successful peaks on central bank demand and a resumption of interest rate cuts by the Fed. Prices are on track to close out a third consecutive quarterly gain, with holdings in bullion-backed ETFs at the highest since 2022. Banks including Goldman Sachs and Deutsche Bank have said they expect the rally to extend. Meanwhile, gold's precious metal peers have seen unprecedented tightness, exacerbating concerns about dwindling stockpiles of freely available metal in London as several years of supply deficits come to a head. So you're sitting here thinking that people actually are sitting on gold, that they actually have the weight, and they don't, right? So lease rates, which reflect the cost of borrowing metal, generally for a short period of time, for silver, platinum, and palladium, have all surged well above their normal levels to close to zero. Fresh concerns that palladium group metals may be swept up in Trump's Section 232 investigation into critical minerals have exacerbated market tightness, according to Citigroup analysts led by Max Layton. The bank sees higher odds of palladium being subject to potential U.S. import tariffs. That means if you are a palladium metals trader, you need to pay attention to this news, okay? The bank sees higher odds of palladium being subject to potential U.S. import tariffs, pending the review that's expected to land in October, according to a note dated September 19. Spot gold was 1.8% higher to $38.28 an ounce as of 1:56 p.m. in New York time today. Okay, that's a Bloomberg Dollar Spot Index. The Bloomberg Dollar Spot Index edged down 0.2%. Silver jumped to its highest since 2011 on Monday after rising above $45 an ounce last week for the first time in 14 years, and was trading up 1.7% to 46.87 an ounce. Palladium was up 0.9% to trade at 1,595 after earlier topping 1,600 an ounce for the first time since 2013, while palladium gained as much as 2.9% before easing gains to trade lower at 0.8%. All right, so there you have it, guys. Pay attention to your metals. Look at this news. We got to see what's going to happen with this government shutdown. But gold is definitely in play for a lot of people because they're feeling the risk, the stress, they're feeling the uncertainty, and they are back to believing in gold. Listen, we've watched gold struggle to hit 2,000. We've watched it struggle over years to hit 2,000. When it broke 2,000 and actually stayed above 2,000, that's when I said the truth is starting to come out. And you see it. You've never seen gold this high. Because now you can't hide the fact that debt is a problem. We don't have money. So, I'm not going to tell you what to trade. I'm going to tell you, look at gold, read between the lines. Take a look, all right? But stay away from if you want to use ETFs, use ETFs. But remember, if you can't hold it, you don't own it. Have a good day, guys. Appreciate you.